Welcome back, everyone. We are normally not filming outside, but when we do, it is a good occasion. So we'll be talking about the title of this video, why I just sold $120,000 worth of Apple stock. And if you know, several months ago, if you're an OG fan, you would know that we did a video why I just sold $54,000 worth of Apple stock. So spoiler alert, you probably know what's coming. But we'll be talking about why I just sold this stock, the timing of it, the reason, all of that. Before we do, as always, make sure you give this video a big thumbs up. Smash the like button, I would really appreciate it. And you want to see more content from the channel, make sure you are subscribed. Click that big red button and the notification bell as well. That bell will notify you when we do post a brand new video. So without further ado, let's get started and dive right into today's video. So it's not like I sold the stock because I didn't like Apple stock. It is because I had to free up and liquidate some funds to, yes, close on another property. So if you would know, several months ago I actually told you that I was closing on my second property. This was back over the summer. But what happened is the deal was about to go under contract, but then the seller just walked away. They were out of the country, and for whatever reason, they said they do not want to continue with the deal. So that's what happened with that original second property. Was so close to being done and complete, but unfortunately the deal did not go through. Fast forward a couple months and I got another duplex. The first one was also going to be a duplex under contract, and that deal is finalized and we are just waiting for the clear to close. It's under contract, been under contract for quite some time now, and we're very, very close. Probably going to be closing on it in the next week or two. So that is why I had to liquidate the funds so the bank can move ahead and give me the clear to close. So I just sold $120,000 worth of Apple stock the other day. It was just under 800 shares. It was like 799.99 something, or just under 800. But originally back in May, when I needed the original down deposit for the first deal, I sold roughly $41,000 worth of Apple stock, about 324 point something shares. So technically, if you add the numbers together, I actually sold closer to $161,000 worth of Apple stock for this deal. But I just called this video 120,000 because that's the stock that I just sold the other day. So I wouldn't be able to say that I just sold the other 41. Had to keep it real with you guys, and just so you understand, that money has been just sitting, floating in the bank account, earning very, very little compared to what Apple was doing. And again, it has nothing to do with the stock itself. I like Apple, but I had to liquidate the funds so I can go ahead with this deal. So let's break down the deal a little bit prior to closing. Of course, after closing, we'll be doing a lot more content on this deal. But just for right now, break down the basics and go through it. Just a quick summary for you guys of this property. So I wanted to go bigger, right? So my first deal that I closed on back in June was a single family residence. I wanted to go bigger, up the ante a little bit, and do a duplex. So I got something very, very close under contract. That would have been a great deal. It required some work, but the after repair value would have been incomparable to what you could have found in the area and anywhere within miles radius. So unfortunately that deal did not go through. Very disappointed, but you live and you go on. And so this deal is very close to me in proximity, and it is a duplex, 2 units. And one of the units is currently occupied by a tenant. So unfortunately we can't get them out just because it would be very, very hard. The seller doesn't want to do it. They don't even want to communicate with the tenant, and it has to be delivered to me with that one unit occupied. That unit is a 3-bedroom, 1 bath. The other unit is a 2-bedroom, 1 bath, total being 5 bedrooms and 2 baths. It is a great location, probably worth a lot more than I'm paying for it. And so we have a lease agreement that it's already prepared. I'm going to be bringing it to that tenant on the day of closing after the fact. And then I'll immediately list the other unit for rent, get that rented. Probably should be within a few weeks after closing, shouldn't be longer than that, to get that other unit occupied. And both units collectively will probably bring in close to, quick math, roughly like $5,500 in gross rent. As far as cash flow profit, that will equate to roughly about $1,800, maybe $1,900 in cash flow. And that's a great deal. Now, percentage-wise, it's not as much as I'm making right now on my single unit. So I'm actually making more percentage-wise, not dollar-wise, on the single unit. But still, it's a great deal, and it's still average, maybe a little bit above average cash flow return, what you want in real estate as far as cash on cash return. We'll definitely crunch the numbers in a separate video when both units are rented out, and we can look at the cold hard numbers after the fact, after both units are actually rented and the lease agreements are fully signed. We'll definitely do more content on the deal, but just some basics for you. The duplex will be closing for $587,000, 587, and we'll get into the financing. So essentially I could not qualify for a conventional loan under this deal just because it's so expensive, right? The price is just so high that I couldn't show enough income to actually cover the monthly expenses, and then a little bit more than that for the debt to income ratio. So I'm actually doing a DSCR, or a debt service coverage ratio loan. It's basically a no income check loan, or a no doc loan. It has a few different names, but it's officially known as a DSCR loan. It is not a conventional loan. It is 30-year fixed, but what happens is the interest rates are a little bit higher with this type of a loan. And this is a great product for investors, right? Particularly people interested in real estate investing, especially people that are self-employed like me that have a tough time showing income and wanting to write off the deductibles that they're entitled to. And so they take a look at your assets and credit on a DSCR loan. They're not actually looking necessarily at your tax returns, at your actual income that you report, but rather what you own, whether it's 1 unit or 100, and your credit as well, your credit score and your payments if you're on time. And as a real estate investor, particularly in the residential space, you'll eventually need to do a loan such as a bank statement loan or a DSCR loan, because the cap you can have on your conventional loans is 10 properties. So once you hit 10, that's it. You can't have any more unless you put it under a spouse's name or a friend's name, someone else's name. If you co-sign the loan, your cap is 10, and that could even change. It might be brought back down because just years ago, the cap was actually 4. They raised it to 10 under Freddie Mac or Fannie Mae. And so now that number is 10, which is very generous, but eventually you're going to hit that and you'll be tapped out. And you don't want to sell your properties unless you're buying something of greater value, a better opportunity. So a bank statement loan or a DSCR loan is a great option for you, especially for people that are self-employed, for real estate investors that are looking to scale up and do it big, 10x. And you can always refinance into a conventional loan after you close on the DSCR loan. So if you really wanted to, you can always go ahead and refinance into that conventional, but do know that there are closing costs that would come associated with it. So you have to really make sure that it's worth it. You have to run your numbers, make absolute sure that it would be worth it to refinance, and it would put more money in your pocket because there are going to be a lot of closing costs. Could be tens of thousands of dollars to the refinance, depending on your situation. Now, is there actually any work that has to be done on this property to make it ready to go, ready to be rented and occupied? Well, let's just quickly flash back to the first property. As you guys know, I got a little bit lucky. I hate the word, I don't like to use the word luck, but I did get a little bit lucky with the fact that the tenant that I bought it from, or rather the owner, wanted to rent it from me and become my tenant. So the property was ready to go, very turnkey, actually very little maintenance, if anything just replaced the water heater, but it was ready to go, and there really not much work to be done at all. It was in great condition. I wouldn't call it mint, but it was in great condition. So with this property, you have that 1 unit occupied. Believe it or not, the top unit that's occupied, the 3-bedroom one, the tenant is a contractor, and they actually did a lot of the work. We assume they have some sort of agreement with the current owner that in exchange for doing this work and renovating that unit, because it's immaculate, it's really, I would call it mint condition. It is very good condition. We assume that there's some deal that they did that if they work on the unit, because he's a contractor, they won't raise the rent, and you'll keep the rent low, but we'll renovate it to make it higher in value. Just an assumption, but we don't know that for a fact. And so it is in great condition, that unit. The other unit's also in great condition. It's more so just about the bones and the structure. So the roof needs a little bit of work, and then there's also some plumbing work that has to be done, some heating work. But other than that, it is in very good condition. It is in great condition, ready to be rented. Now, it is worth noting the reason why I had to actually sell a lot more stock and put so much more down on this property compared to the first one. Well, number one, because it's more than double the price. It's very expensive. Number two, on a duplex, and this is for a conventional loan or a DSCR loan, you have to put down at least 25%. Interestingly, with the conventional, I would have qualified, but I would have had to put down 30% nearly. And then on the DSCR, I'm putting down 25%, and I do qualify that way. So that's why I had to put so much more down and sell so much stock therefore. And so that's why we are here right now talking about why I just sold $120,000 worth of Apple stock. So more videos will follow suit. Maybe we'll even do a little bit of a tour for you guys in that 2-bedroom unit, MTV My Cribs, right? I wish you guys can see that 3-bedroom unit though. That one is really a piece of art between the kitchen and the bathroom. It is truly in mint condition. And so maybe if the tenants move out, maybe if they don't agree to that lease agreement ultimately, we can get in there. Hopefully they don't trash the place then have to report very sad news to you. But with that being said, more news and updates are to come on this property and this deal. If you do have any questions, always let me know down below in the comment section. We'll be sure to answer you as promptly as we can. And if you want to see more content from my channel, number one, make sure you give this video a big thumbs up, smash the like button if you enjoyed it. Make sure you're subscribed, click that big red button and that notification bell as well. If you want to get some free stocks, all on me, all free, use those links down below in the description of this video. Sign up with Robinhood and or Webull to get some free stocks, some valued up to thousands of dollars in some circumstances. So let us know what stocks you do get. And if you want to connect me on social media, I am on Instagram at Logan Cohn, LOGANKOHN right there on your screen. Hope you enjoyed this video. I look forward to seeing you guys in the next one. Take care for now.